Hello, good evening. This is Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Thursday, the 11th of June. Crash day in the markets today. We had about a 5 to 6% drop. Really, from a BTC perspective, this is no different than just about any other candle. And honestly, looking at the implied volatility, we didn't get much of a bump at all today, which is a little bit surprising. You can see that the realized volatility is shooting straight down, right? So just a very small bump in implied volatility. So really the cryptocurrency market sort of shook it off. However, that's not what the larger financial markets went through today. Here's the S&P 500, and it's down about 7% recently, right? So we have the 10-year note, which was driving higher lately, indicating that, okay, maybe we're going to start to see some just glimpses of growth going on here, which follows the interest rate. And that has just completely destroyed itself back down and diving down towards zero again. So of course, when that happens, you've got people running into bonds again. So these are some just seismic moves that are in the larger markets. And as it relates to Bitcoin versus the US dollar, or really any other cryptocurrency, this is a very muted reaction for that. So this is just another risk asset. So think of it that way right now. I think a lot of the thought that, cryptocurrencies are going to displace the US dollar, and those long-term thinking, that is absolutely correct. And I would not be surprised down the road someday to see something like that or some derivative of that. But for right now, everybody's just like, boom, uncertainty. What are you going to do? Sell first, ask questions later when it comes to risk assets. And we saw this pretty much across the board on crypto today. There were no safe harbors out there. But again, what I have to illustrate is that even though we've lost the trend line on a closing basis, what you have to understand, the silver lining here is that we're still printing higher lows, still printing at higher lows. So every time we drive higher, we're printing higher lows every time. So this is not actually bad news. That it would be bad news if we printed a low below 8,800 or started diving towards one of the fibs, even though I think longer term, diving towards a fib might actually end up working best for us longer term. It's just going to be inconvenient being so close to that breakout at 10,000, right? So a lot of disappointment across the board today, like, oh, is it ever going to happen? Is it ever going to happen? But what you've got to do is you've got to look at the bigger picture. You've got to go out to the log chart. You've got to go out to that monthly chart and say, what's going on here? And it's just a big monthly consolidation. The energy is there. It's just a matter of time before this thing breaks out, considering the trend of what's going on. But before it does, it's going to have to go along with the greater financial markets, right? So it's not going to be going against the greater financial markets, because right now, this is another risk asset. All right, folks, that is it for today's report. Thanks for listening. Have a great Friday. We'll see you on the weekend report.